All right, guys. How are you guys? Welcome, everybody. Glad to be with you. How you doing? I see people coming in. So, yeah, welcome, everybody. My name is Saul. Glad to be with you and excited for this session. We have an interesting topic to cover today. So, just before we get started, anything I say here is not meant to be buy or sell signal on any instrument, any asset. I just want to show you some concepts that we're going to discuss today and the way I approach the markets, and for you to take these concepts and apply them to your own situations. So no buy sell signals. Do not follow along. Be responsible for your own trading decisions, guys. With that being said, we're going to discuss today. Divine, welcome. We're going to discuss today a very, I think, interesting topic, and probably not well discussed, about how to fix bad trades, and probably more than how to fix bad trades, how to fix losing trades. Okay, and that's what we're going to discuss now. I wanted to to have a trade to show you. So let's add this. All right, and I'm going to try to explain this, using the setup I got right now. Cross, welcome, KK, glad to have you guys. So let's start with this. I'm going to tell you what I want to what I'm seeing here on the USD CAD, and then we're going to go into the topic of fixing bad trades and what can we do to improve our stats and our our trading performance. Okay, basically, if I give you my analysis on the dailies, I have a bullish bias. I know we're pushing towards a strong selling area. Okay, so we're at the very top. So on the dailies, maybe I don't have a particular reason to be looking for longs, but if I look at the way the market is getting to that area, we see we have strong pushes, strong movements to the upside. So there's a slight bias to the upside. So when I go to lower time frames to try to look for intraday opportunities, I will keep my bias to the long side. If I was looking for long-term opportunities, probably on the dailies, this is a great selling area. Okay, it wouldn't make sense for me to buy here based on the dailies, but makes sense to take that bullish bias to be building long position. And that's what I was doing just prior we started the session. I'll show you some of the trades. Okay, so I was after this long run to the upside, I was just looking for pullbacks, and I was taking profits with the long bias. So I got my bias. I got not from the hourlies, not very strong levels other than that, and the one we've just created, and of course that is very far from our session. But if we zoom into the 5-minute charts, we will find, or the 1-minute chart, we'll find some good levels. Okay, so good key levels that we want to be aware of, and then I'm going to discuss a little bit these topics of fixing losing trades, and if we have the opportunity to show it live, we'll try to do it. Okay, so first we need to distinguish between what's a bad trade and what's a losing trade, because there might be good trades that they follow your checklist, they follow your trading plan, they follow your strategy, and yet they're losing money. So those are the trades that we want to try, or may have a try, or we might have an opportunity to fix those trades. Okay, as long as they're good trades that are losing money. But if we just found ourselves in bad trades, meaning we just took an impulsive trade, we're revenge trading, it's a trade that is not considered within our risk parameters and our strategy, and it's not a good setup, and yet we took that trade, I don't know why, I consider that a bad trade, and I would not like to try to fix that trade, because fixing those kinds of trades usually lead us to more, led us to more or to larger losses. So those kind of trades that are not part of our trading plan, I do not want to try to fix them. I want to close them. But if I took a good trade aligned with my trading plan and yet it's losing money, I want to try different things in order to try to fix them. Okay, and we're going to. Hey, Jesus, glad to share with you. So before going into the okay, how do I fix this? I need to ask myself, is this trade fixable? Okay, because even though it might be a good trade, okay, or a good setup, okay, let's say I'm just going to give you an example, and I'm going to take that example from the AUD USD, okay, on the dailies. If we see this pattern or we see this chart, at this, we're on the dailies. These are like very, very important lows on the dailies, and I see this key support based on the dailies. From there, there's not much. You can see if we break that level, we're going to go very, very low there. Okay, we have a long distance to go all the way to that level. Okay, so let's just imagine we market here on the AUD USD approaches that support. I go into longs and anticipating a bounce of that level, and suddenly I see a breakout of that level. Okay, so those are the trades that I consider unfixable. Okay, that the manage of trying to fix those trades can be catastrophical for your trading. Okay, because there's nothing in the market or nothing in the charts supporting your attempt to fix that trade. Okay, because the techniques we're going to use in order to fix a trade is going to be scaling in, okay, or scaling out. We're going to add into that position, or we're going to scale out of that position. But if I see this chart right here breaking one of these key levels, or I see this chart in the future trading around this area, these are historical lows, guys, and I'm going into longs here, anticipating the bounce of this key level, okay, historical low, and attempting a bounce, okay, I'm into long positions, and suddenly I see this market breaking down. There's no way, okay, or I should not be trying to fix that trade, because that might continue, pips and pips and pips and pips against me. Okay, same thing on probably on dollar cats. If I go to the dailies, we can see this historical high. So if in the future we see dollar CAD trading around those levels, and I'm going into shorts, and I see that break to the upside, that might be a major, a fundamental shift in the market, and it's not thing that that's not something I want to be fighting. Okay, I want to be that kind of trades. I just want to take the loss. Okay, there's no point in trying to fix those trades. So those are the trades that I refer in my head as non-fixable trades. Okay, trades that is better just taking the loss than trying to fix it, because there's no basis. Okay, there's no key levels behind in the past that will help you fix that trade. Okay, so first we ask ourselves if this trade fixable. Okay, so let me go back here to the 1 minute chart. So if I give you guys like probably a easier example. Okay, if I want to be buying off this level and that goes against me, I still have this level here, this level here, and this level here to try to get that bounce back up and help me fix that trade. Okay, so if I go long here and that fails, I can go again long here, I can go again long here, and I can go again long here, and I can try to fix that first level. Okay, but if I'm off the charts and I come back into the charts and I see this chart trading down here, okay, I'm flat, I'm not in any position, and I see the chart trading here, and I go long, and that breaks down, you see I have nothing left. There's nothing there's no key levels in the past to help me fix that trade. Okay, so as long as I'm buying here, that would be a fixable trade. Might fail, but I could try to fix it. But if I'm trying to trade down here and that level fails, okay, that's like a key level on the 1 minute chart. That's a non-fixable trade. Okay, so hopefully it's, you can see the difference between key levels that are going to help you fix the trades or there's nothing in the charts that will help you in the future to fix it. So if I'm into a fixable trade, okay, I can do two things. If a trade is going against me, I can add to the position or I can scale out of the position. And it's something that you're going to have. Okay, let's try just to. Okay, let's jump into a trade to see if we can, show that live. Okay, so that, for example, it's not precisely a great entry. Okay, I recognize this like probably like a consolidation. So ideally, I want to be placing trades at the bottom of the consolidation. So that's not a great entry. Okay, so I'm going to try to fix that first. Okay, my first entry. So as long as I start small, and this is key, guys. Okay, the key for fixing trades is starting small. Because if I start with my full risk, okay, if I go all in my first entry, I leave no room in order to play around with the trade and try to fix it in case it goes against me. Okay, so the key to fixing trades is starting small. Okay, no going with your full risk allocation. Some of you might be comfortable risking 1%, 2%, 5%, whatever it is. If you go full risk, you're leaving yourself no room to fix it. And if you try to fix that trade, although you went in full allocated, you will only potentially cause yourself a larger damage. Okay, so the key to fixing trades is starting small. So for example, in this case, okay, I started small. This might go and take my profit, but if this goes against me, I'm trading so small that I can allow myself add another position. So now if this goes against me to this support, I can add into that trade. And now having a second trade down here, I can do a lot of things. Okay, if I and probably we'll see this live in a minute. But if it goes and I add down here, and probably we'll wait and see what happens, I only need a little bounce to the, I'm averaging my loss, okay, my trade. So the minimum bounce up that will help me fix that trade, and that's the powerful, or the power on adding into trades. Now, if I suddenly find myself over allocated, what I want to do is start adding, scaling out, and I'll try to show that. Okay, so let's give a go here. Okay, so we are right at the support. Okay, we have 3 pips of difference between my first entry and my second entry. So let's see if we can get a little bounce, and a very small bounce. Okay, only 1.5 pips will put me in a situation of break even. Okay, and we might see that I need 5 more points and I'll be break even. Okay, so that's the idea behind scaling into the position. Now, if for some reason I start changing, I see a change in behavior of the market, and I start saying, okay, breaks to the down, and my bias, the momentum changes to the downside. Okay, look at this. Okay, you see how I'm almost break even, although I'm only, okay, I'm break even now, although I had a losing position. I could take the loss right now. I could take two of the trades that off, and I would be break even when I had the chance. Now, if I see a change in market behavior, and I see the momentum start going down strongly, then instead of adding, because adding will cause me a big damage, I might take down one of the positions. Okay, so instead of, let's say I want to, okay, let's say I define that my stop loss need to be, okay, both my stops need to be there, and I see the market starts crushing down. okay, instead of leaving both of these trades going against me, okay, so each of them, around $100, probably around this area right there, I can take one of the positions off. Instead of leaving two trades going $100 against me, what's that, like 20 pips, okay? So instead of losing 40 pips, I will be losing 20 pips in one, and I will be losing probably only 10 pips in the other one. So instead of, I just saved myself 10 pips of loss that I'll be able to allocate in a better setup than the previous one. Okay, I hope that concept is clear, and we might see that just in front of our eyes. But it's very important to to read market behavior and making sure okay, what's happening around those key levels that I want to be adding. So you can decide, okay, I'm going to add into this trade, or I'm going to scale out of this trade. Okay, those are the two techniques we can use. Now, if we see there's a reaction of the level and you scale in, so you're just averaging your cost, okay, your trade. So you don't have to trade. You don't have to add each time one trade. You can add two positions or three, like a pyramid, and then the minimal bounce back in your favor, you will be break even. Okay, you will be in the money. So that's adding. And if you see this just starts breaking strongly against you, then it's not a good idea to be adding in, but you can start scaling out of the position. And as I mentioned, instead of ended up losing 40 pips, you'll be losing 30 pips, and you have just save yourself 10 pips, so you can allocate to the next trade, which one might be a total a loss at the end, might be a loss, but instead of losing the full risk you took, you're just losing less. Okay, so if you risk, for example, 1% in these 40 pips, okay, let's do that right now. Okay, so instead of losing that 1%, you might be end up losing 0.6%. So you now have 0.4% that you can add into a better opportunity you have. Okay, so that's the idea. So here, for example, I saw, okay, we try to bounce from the area. Okay, we have the reaction, and that failed. It didn't turn in the direction I was looking for. Okay, instead of that, I see a strong candle down, and I see that's that might break to the downside. So at this point, I decide, okay, I take half of my position out. So now if that continues against me, I saved myself a lot of money. Okay, so that's scaling out of the position. Now I keep reading. Probably I will see a change in price action and momentum again to the upside. Then I will add the position I just took off. I will add it again. Okay, and I will be playing with my trade until the point that I'm break even or profitable. Okay, so that's the idea behind looking to fix trades. Okay, we need to just summarizing. Okay, first, is this, we ask ourselves, is this a good trade or a bad trade? If it's a bad trade, not aligned to your strategy, take it out. Okay, just close it. Not worth trying to fix it. Is this a fixable trade? Okay, is this a good trade that is losing money? Okay, let's see if we can fix it or not. Then we ask ourselves, is this a fixable trade? Meaning, do I have levels supporting, okay, valid entry points that will help me fix this trade? If yes, let's try to do it. If not, take the loss. Okay, it's better than trying to fix it. And then if this is a good trade that is losing money and it's a fixable trade that is losing money, then let's see what techniques I can use to fix it. Okay, is this can I add in? Can I scale out? Okay, do I scale in? Do I scale out? How much do I scale in? But the key for everything is to start small. Otherwise, you're not allowed, you're not leaving yourself enough room to manage actively your trade. Okay, so let's see how this unfolds, and we'll take it from there. Sorry, guys, I didn't. I was talking a lot. Let's look at the chat. Sarah, welcome. So, hello, I've reduced my lot size to make my fearless to losses. That's great, but now I don't care about profits either. Is that a good balance? Yeah, like you wanna get to a point where losses and wins are just part of your routine. You don't. If you go practice basketball, okay, if you go and play basketball, you play in a full match, okay, so you can't be so happy and so excited for every basket, okay. You will have a lot of losing baskets. You'll throw many times to the basket. Many of them will fail, many of them will get in. So that's the idea with trading. You will have losses and you will have wins, and you just need to to make them part of your routine. And if you're reducing losses, if you're reducing your lot size, as you mentioned, that's great, because you will not be so eager or so rushed to take profits quickly, because you will try to maximize that win. Okay, so you will not be rushing into taking that quick um, um, gain, because you will want that small gain to grow. Okay, so you will let it run. So that's a good one. Talendu, we got your we got your present. Thank you very much. Okay, let's see the result of this trade, for example. Okay, let's analyze it for a second. So we took one entry, two entries. Okay, three, okay, almost 4 pips loss, and that one also like 4 pips win. Okay, so that was a good fixing. Okay, but in case this had continued back against me, I would have saved a lot of money by just taking that loss. And probably after, if you continue reading price action, you can add again, and just managing your positions. So Tarandu, thank you for the present. We got it. We hang it here. Very, very nice. KK, understand the concept. Trading might need some experience to handle it, perhaps practice. Yes, these are concepts you need to first practice, and you need to know your strategy, because you will know if your strategy allows yourself different entry points. Okay, that's also key, which is a strategy that does not doesn't ask you to go all in every time. Okay, but it gives you flexibility. Frederick from Costa Rica, welcome. Juan Carlos from Spain, welcome. Trying to thank you. FVG Capital, you use a 5% fund account. Yes, this is a fund account, a real account. Correct. Your account is Bootcamp or other. So this is my trading room account. So this is an account we opened a couple of months, some months ago. With $600,000. And it's an account I only trade once a week. Prior to these sessions, during the day I have a session, that's the day I trade this account. Okay, but many of our trade, and what I want to show you with this account is just the opportunity behind not being so rushed into making large profits of small accounts, but keeping that patient, working on your accounts. And many of our traders use our scaling plan to get into $500,000, $600,000 and above. And then the opportunity is there, because you don't have to be making crazy returns in order to make a good income. Okay, so trading this account just once a week for the past months, you can make nice money. Okay. Shane, would you not look to short this? Would you only look to go long? I could short this market. The only thing is my bias, based on what the top-down analysis, my bias is to the upside. So I try to align myself with my bias, which is long, and that's why I'm looking to look for long trades. But if I see a change in the momentum of the market and I see there's opportunities to the downside, I might short it as well. But my bias hasn't changed and it's to the upside. So I'll just try to keep trading long. Okay. But sometimes if I have a long bias and momentum is short to the downside, I will short. Okay, no problem. Just this case, I'm looking for longs. Let's see what else we got. Same for gold. I'm bullish biased, but I have taken some, during this bullish period, I have taken short position as well. So dollars has been super bullish. Okay, we were talking last week about the key supply area we're right now, and that is expected to have a reaction to the downside. So we have actually last week, the end of last week, very strong, or yesterday and Friday, very strong selling days, and today just a crazy reaction to the upside. So showing the strength in the bullish side of this market. So here again, my bias is to the upside, although I'm not finding any good entry levels right now. But my bias is to the upside. On the dailies, for me, it doesn't make sense buying right now, okay? Because I'm asking the market to break historical levels in order to give me, to give me some profits. So based of the dailies, and just as treating this as a normal risk reward trade, makes more sense shorting than going long. But we need to get an entry signal. So the bias is still bullish. And AUD USD, we're at the same level we were last week. We're saying we're in a very strong buying area, but yet the buyers haven't come to the market, nor the sellers. So we're still trapped in that channel. Hard market to trade. Same for Euro USD. So the clearest bias I've got them on gold, dollar CAD, USD JPY. Those are the markets that I will be looking to trade. So here, for example, if I go short, okay, if I short the market right now, and that breaks to the upside, you see, I have no levels. That might be a good trade, but it's not a fixable trade, because a breakout to the upside might be potentially a catastrophic break. Okay, very, very powerful break to the upside, simply because we are at a very strong resistance area, that if we break to the upside, that might be very, very strong. Okay, and I don't want to be finding myself fighting that. So if I'm taking a trade like that, I just wanna set my, I just wanna set my stop loss, and that's it. I don't wanna try to fix that one. Okay. So that's a good trade. I mean, we're at a resistance. I'm only, I just want traders, some sellers to push the market a little bit. Okay, some pips to the downside. But if that breaks up, I don't want to fight that. I don't want to try to fix that one. I will take the loss. Okay, that's the difference between going long and going short right now. If I go long, I have my levels to protect me. If I go short, there's nothing behind to protect me, so I'll be exposed completely. Sir, how to find daily bias? There are different ways to find daily bias, and I think you need to eventually find your own way to understand bias. And I know there's a lot of if you go to ICT lectures, there's a way to define your bias, your daily bias. The way I look at bias is based on the dailies. Okay, on the daily charts, I see what has been the latest price action. Okay, the strongest price action based on the dailies. So even though, and I mentioned that, and this is a good example, where a very key selling area on the dailies, we are right now, or the current price action, it has been very bullish. Okay, we're coming from this demand that held, strong demand that had a pullback and continuation. Today's price action has been very bullish. Okay, so on the dailies, even though we are at selling area, we're coming from very strong bullish activity. Okay, so that gives me the bias. Okay, what's happening on the dailies. So that's the way I define it. But I know a lot of traders that they use indicators, for example. Okay, they say, okay, I'll throw an indicator that'll help me. For example, I'll throw a 200 moving average. Okay, every time market is above the 200 moving average, my bias will be long. And if we're trading below the 200 moving average, my bias will be short. Okay, that's just the bias. Now the bias gives you a certain edge because you're aligned with the big money. So when you go into lower time frames and you start to take positions, and you're aligned with the bias, you will find the big money push your trades in the direction you want them to be pushed. So I would go deeper into supply and demand theories. Okay, especially here, for example, we have this massive demand and continuation. So we're above that massive demand. Now that massive demand tends to be at 200 HMA. Okay, because that was a switch in the market. So so as long as we stay above that level, I want to keep my bias. If I suddenly see a massive reaction to the downside, my bias might change. But that's how I define my bias. I hope it's clear, guys. But you can start with an indicator. An indicator might help you at first, and then with some practice, you can find your own way to define bias. Jordan, if you go short, couldn't you place your stop just maybe 2-3 pips really tight at the top? Yeah, that's I think that's what I did. I went short, and I think you're meaning I went long, I went short. Why didn't I place my stop there? I just place it based off the 5. If we see back here, you can see we have some price action back there. So on a 1 minute chart, we might see a little fake out because back there's more price action, okay, that we don't see here, but we see it on the 5 minute charts. So that's why I placed it there. So instead of having 3 pip loss, I had a 5 or 6 pip loss. And you can see, you can see the bias working. Okay, we can see every time market is pushing down, has been, rejected to the upside, rejected to the upside, pushed up, pushed up, pushed up. So that's the bias in working there. I like this price action. Let's see if we can. That's a good question. Okay, which is good session to trade? And the reality is, there's no better session than another session. Sessions are different, and they all tend to have like different nuances and different volatility and different volume, and you just need to know what to expect of the session and making sure you're applying the right concepts into the right session. Because if you're trying to to apply a trend following strategy in the Asian session, you probably won't find them. Okay, or if you want to apply a breakout strategy, a break of key levels in the market on the Asian session, which is a quieter session, it might not work. Okay, so so those kind of approaches to the market, breakouts, trends, which require a lot of volume being injected into the market, will work better on the London and US session. But if you want to apply ranging concepts, faking counter trend trades and faking the markets, that will work fine on the Asian session and the Australian session. Okay, so it's just knowing the characteristics of each session, and tuning what you're looking to do to that session. Okay, so there's no better or worse. It's just what you want to accomplish on the session. That's suddenly quieter, huh? We have Christopher, hello. I just let's see if I can get a bounce at this level. Gold, I mentioned my bias is to the upside, and we're getting these strong pushes to the upside. Now we have this strong push, and right there, that's a good buying area. You can see it clearly on the 1 minute chart. So right now, where we at now, that's one, and that's second. Okay, below that, I need to take the loss. So now let's see how it behaves around that area, and then around this area down here, and then I might decide to add into that position, and my stop needs to be there. Is this session recorded and will be shared? I missed a few minutes. Yeah, so the recording will go directly into our YouTube channel, so Cola, so you'll be able to see it there. Jesus Young, you need, we all need. So yeah, it takes a bit, but traders who stay focused on the long-term process, they get there. It's not rocket science. It's a matter of scaling your account a few times, and you're there. So instead of focusing on trying to make big gains in a relatively small account, you focus on, okay, I'll grow my account into a size that will allow me to make 3% a month, and I'm making great money. So it's just changing the focus. Okay, so that's the reaction of this area. If there's no follow through, it has to follow through now. If it doesn't follow through, it will go back to that area, and depending how it behaves there, I might add, and if not, I'll just need to take the loss. Pound yen, yeah, I look at pound yen previously, and it's very, very similar to dollar yen. Okay, bias to the upside, but let's have a look together. Because the movement we're seeing on yen pairs is a yen mover, not a USD or pound mover. But let's have a look. Okay, so that push to the upside is the yen is making it. Is causing it. So bias, again, my bias needs to be bullish. On the hourlies, we see the selling areas where right now, okay, we have supply. That supply area, let me close that. That supply area was respected. Okay, we reacted and we created a new supply area, and we're right now there. But we're coming from very strong demand right now. So there's a chance we have a pullback like we're seeing right now, and we finally break this supply area, okay, to the upside. So I would keep my that's the I guess, yeah. So that's the strong demand, okay. So I'll keep my bias bullish. Frederick, thank you for that. Where do you normally place your stop loss, and what's your best RR you can advise me to take for a trade? That's a complicated question, Jude, right there, because ideally 100 to 1 risk reward ratio. Okay, we need to look at what's realistic. So we're a bit late in the session to go deep into that topic, but you need to understand what's expected from your strategy. If you're a swinger, then you want, if you're a swing strategy, you want to keep your risk reward ratio at least 2 to 1, 3 to 1. If you're scalping, you will usually, like in this account, I have a negative risk reward ratio, but I have a very high win rate. Okay, and I think if we see last trades from this session, okay, you can see all of these trades. We have two losers, and then 1, 2, 3, 4, 5, 6, 7, 8, 9 winners. So those are the stats you wanna keep. Learn and earn. Yeah, I think if you'll go back to the recording of this session, you will see the process I do. So I start my analysis on the dailies. I get my bias from the dailies. I mark my levels, my key levels of the hourlies, and then my setup on the 5-minute chart, and then my execution and management on the 1-minute chart. So that's usually what I do. So it's fighting, it's just fighting there at the level. I guess we're going to see a little break to the downside. The fact that we're struggling to push to the upside, we might see a next movement to the downside, to the next level before the turn. Okay, if the turn happens. But if there was meant to be a turn around there, I suppose it should have happened already. So I'm almost expecting another push to the downside before the turn. That's a great question. That's a good one, Gregory. So usually what I do, this is gold. Gold is not something I trade very often, but usually when I'm trading just Forex, you will see me trading full lot size. But and what I do is, if I need to go, if I want to place 10 lot size, I will place 10 different 1 lot size trades, okay, in order to build into my 10 lot trade. Just trading, rounded numbers like full lot size, 1 lot, gives me clarity on my pips and my statistics and my risk reward ratios, and then I use that, to build my positions. So I'm usually trading other accounts similar size. I'm trading 40 lots, 50 lots, but always using 1 full lot size. Okay, I'm just clicking the button more times. So I might be trading 10 lots, 20 lots, 30 lots, all with 1 lot size trades. Hope that makes sense. Pleasure. Because then that helps me stay focused on my process of my pips. Okay, you will notice here my profit is based on points. Okay, pips, not in money, and that's what I want to make sure I'm looking at. Okay, because when you look at your P&L in large accounts, you will see your P&L going down and up. A couple of hundreds of dollars or a couple of thousand of dollars. So it's easier to focus on pips than that large amount of money going up and down. So I'm just stay focused. That way I just stay focused on pips. Okay, to be fair, I'm losing confidence in this trade. There's no reaction. Just the setup on the 5-minute chart. The setup is what came from this strong push to the upside, the pullback, and I'm just waiting for a continuation higher. So that's the break to the lower area. Okay, so now let's see how price behaves at the lower area. And as long as we stay above that, that's a valid trade. Okay, we're still in a good shape. If you trade Fibonacci's, I get that's the 50%. So those key levels tend to align to, Fibonacci's, indicators, Bollinger Bands, and all of that. So it's just price. Gregory, welcome to the club. But the thing is, when you trade big, when you go with big lots at once, you make yourself very, very engaged with the outcome of the trade because you're risking 2 lots, and you're losing any chance to manage actively your trades. Okay, to be able to scale in, to scale out, because you're so committed and so committed to the trade that there's nothing left to do but relying on having great statistics to give you any edge on the market, which is tough. It's not easy task. So that's why starting small is a great way to build into positions. Jude, what's your advice? A new trader, an evaluation lot size to take with 10K account with 100 or 10 leverage? The leverage, high leverage, usually goes against traders, because we have that tendency to cut our winners and let our losses run. So when we get winners and we're very, very leveraged, that would be, we will cut it and we will get a small win, but one loss will be catastrophic. So I would say, if you're trading on a prop firm account which has loss limits, approach your maximum loss. Let's say you have a 10% loss or a 5% loss, maximum loss. That's your 100% loss. So now you need to cut that into 1%. Okay, what's the 1%? What's the 5% of that 5% or of that 10%? And that's what you should be risking per trade. And you'll find out it's around 1 to 10 leverage. Okay, so there's no need to go above that, in my opinion. Okay, just reading what happened here, we had the reaction. Okay, and this is what I love trading on lower time frames. Momentum is changing. Okay, we have the reaction of the lower demand area. So we reacted and we were immediately pushed down. So that's a change in momentum. Okay, I want to be mindful of that. Now, because I'm trading small, I could still try to fix this trade, and I have probably down here I could be adding into this trade, but now I need to be conscious that the momentum is changing. Okay, so to keep in mind that. Okay, buyers present. Let's see if they can beat the sellers. Now they will have a strong fight around this area. Okay, if the market comes back to that area, we might see again sellers trying to push the market down. And if that happens, we might see a break of the area. If the buyers win the battle and break that level, then yeah, there's an open door for the market to go all the way to the highs. So let's see. Okay, guys, I think we'll wrap up. We had a great session. That's the loss. So we had we discussed bad trades against good trades. If the good trade is losing money, I ask myself, fixable or non-fixable? And if it's fixable, then I apply these techniques of getting in, getting out to fix losing trades or to maximize profits. Okay, and that's that's the way different ways or techniques to fixing trades. That's weird behavior there. But remember to practice all these first on demo accounts, and then before applying this on real market and real real accounts. So I think we'll wrap up here, guys. We had a great session today. It was fun. So thanks for coming. Thanks for staying. And I'll see you next time. Thank you, guys.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.